Okay, next in the video, that is economics bits revision, gross national product at market price, or GDP at market price, GNP at market price, NDP at market price, or NNP at market price. When we have got four important national income concepts. That is, national income can be called GNP, can be called GDP, can be called NNP, can be called NDP. For this information about these four, watch the previous video. Then you will understand this clearly. So what is this market price and factor cost? When the national income, any of these four, GDP, GNP, NDP, NNP, when they are expressed at market price, what does it mean? Market price basically inclusive of taxes, that is indirect taxes. So when you talk about a product, that suppose MRP, maximum retail price, is there, in that price you have generally producer charges the price which is inclusive of cost, whatever he has incurred on factors of production. So whatever cost that he has incurred on factors of production in the form of rent, wage, interest and profit, that is called factor cost. So whenever we charge any price, we have a factor cost, means the cost that is incurred on four factors of production to produce that product. In addition to this, government will impose indirect taxes. Needless to say, most famous indirect tax in India right now is goods and services tax. So when the tax is imposed, generally what happens is price will increase. When the tax is decreased, then really price will decrease. So therefore, when I charge, being a producer, when I want to charge a price on any product, what do? I basically include my factor cost, that is FC factor cost, and plus indirect taxes. Understood? So when I say market price, my market price includes my factor cost that I have incurred on four factors of production and my indirect taxes. So indirectly, when the national income, that is GDP, GNP, NNP, NDP, if they are expressed at market price, it clearly means it includes factor cost plus factor cost plus indirect taxes. That means if I want GDP at MP, I obviously require GDP at FC plus indirect taxes. Now the question is, when we add indirect taxes, the policy is very simple, that we have to remove subsidies, because subsidies are given in the beginning of the season, whereas indirect taxes are collected at the end of the season. Usually when we add subsidies, we are not supposed to add indirect taxes. So when I say market price, I am taking GDP at market price is equal to GDP at factor cost plus indirect taxes. Since I am adding indirect taxes, I am supposed to remove subsidies. Similarly, the same thing, if I want GNP at market price is equal to, simplest equation I am telling you, GNP at factor cost plus indirect taxes minus subsidies. So similarly, when you want only factor cost, you are not adding indirect taxes. So when I want GNP at factor cost, I am not going to add indirect taxes. Remove indirect taxes and add subsidies. So basically, market